Go ahead.
My name is Scott Futterman with SGF Insurance Services. Today I'm going to be talking about the healthcare reform and life insurance. That's what we specialize in. So there's three different avenues to getting health insurance. There's individual and family. So you can either go on Medi-Cal, which I'll get into. You can go on the exchange, or you can go off the exchange. And there's also Medicare, which is age 65 and older. There's also small groups of businesses with 2 to 50 employees. They can offer health care to their employees. And there's also a large group, which is 50 or more. And I put Medicare on there because it's not changing as of right now. So here's some important dates. Open enrollment began on October 1st, and it goes until March 31st. And this is only for the first year. Normally, it would just go from October 1st to December 1st. So next in the end of 2014, that will be the open enrollment date. Before December 15th of this year, you can get a January 1st effective date. Every day after, from December 16th to the February 1st, December 16th on, you get a February 1st effective date. The only reason you would be able to apply after the open enrollment date is extenuating circumstances. Let's say you get laid off. There's also one, if you forget to sign up, you can also sign up, so that's an extenuating circumstance. As you know, there are penalties if you don't get health insurance starting in 2014. You pay the greater amount of the two. You either pay for the first year 1% of your income or a set dollar amount, which is $95. 2015, it's 2% of your income or $325. 2016, 2.5 or $695. So it's the greater of the two amount. Here's some Affordable Care Act rules. It's the 80-20 rule. I'll read them for the camera. Health insurance companies must give a reason for increase in premiums. Insurance companies must spend 80% of the money they receive from premiums on delivering quality health care, not on costs such as salaries and advertising. So it's the 80-20 rule, 80% to claims, 20% to salaries, advertising, anything of that nature. No limits on individual lifetime. They used to be able to, a couple of years ago, limit how much they would spend on your healthcare claims. They can no longer do that. It's unlimited benefit. And also preventative care, things such as mammograms, colonoscopies, physicals, annual gynecological exams. Those are all free. They cannot be subject to co-payments or deductibles. Essential health benefits. If your plan is non-grandfathered, which means I think March 23rd of 2010 and earlier it was grandfathered, anything after that, if you switch plans, these are essential benefits that your plan has to meet. Ambulatory patient services, prescription drugs, emergency care, mental health services, hospitalization, rehabilitative services, preventative and wellness services, laboratory services, pediatric care, and maternity and newborn care. Every plan that you get starting in 2014 will have those essential benefits. Here are the plans. Every plan that you see in 2014 is going to be based on 4 metallic tiers: bronze, silver, gold, and platinum. Bronze obviously being the worst, platinum being the best. The bronze is a $5,000 deductible, silver $2,000 deductible, gold and platinum have no deductibles. You can see their out-of-pocket maximums on the bottom. Bronze through gold, it's both $6,350. Platinum is $4,000. If you get subsidized by the government, I'll get into this in a second. You can actually go into it now. Here is the federal poverty level chart. It shows household size along the left, and then what percentage you're at from 100 to 400 on the chart, and it tells you how much your salary has to be. It's based on your modified adjusted gross income for you to get subsidized. And if you do get subsidized, it's based on the silver plan. That's the one you get subsidized on. You can't go to the bronze plan and get subsidized on that. It has to be the silver plan. And within the silver plan, not only is your premium going to get subsidized, but your benefits as well. So your co-payments can go down, your out-of-pocket maximum can go down, your deductible can go down. I'll show you in a second. There's 3 different levels of the enhanced silver benefits. Another thing I wanted to point out as well is if you're at 150% and below, you can get subsidized on the silver plan, but if you have kids, they will automatically go on Medi-Cal. So that's that. So here's the enhanced silver plans I was mentioning earlier. So here's the normal silver plan, $2,000 deductible, $45 primary care visits. It has a $250 drug deductible, I believe. $63.50 out-of-pocket maximum. So if you go to the best enhanced silver, which is enhanced silver 94, there's no deductible. Primary care visits are $3. There's no drug deductible. Preferred brand copay drug deductible is $5. So you can see that not only is your premium going to get subsidized, but you get really, really rich benefits. Almost, actually, probably past the platinum benefits for enhanced silver. For small businesses, it's been going on for a couple of years, but not a lot of businesses know about it. You can get tax credits, which is a dollar for dollar savings. The qualifications is you have to have fewer than 25 full-time equivalent employees, and you have to pay them an average salary of under $50,000. So if you have a small business with less than 25 fewer employees, paying them less than 25 grand, you can get up to a 50% tax credit on their premium. So let's get into life insurance. There's a couple different kinds. Term insurance is really affordable. It's limited to a number of years. It's usually 10, 15, 20, or 30. And some policies have options to convert. So let's say you have a 30-year policy, year 15, your policy allows you to convert. You can convert that into a permanent policy until age 90, 100, until the day you pass. Based on your health when you took the application, which is really important because a lot of people, their health can go bad in those 15 years. So they base the premium off your age, the age that you're converting, but your health when you first applied for the insurance. There's also another term insurance called return of premium. It's a little more expensive than your normal term policy. You pay a little bit more, but at the end of the policy, if hopefully you didn't pass away, but if you don't pass away, then you get all of the premium that you paid into the policy back. But it is a little more expensive than a normal term policy. There's permanent insurance, there's whole life and universal life. It's enforced as long as you pay. Whole life can build up cash value, same with universal life. But I'm a true believer. I don't like telling people to get this because Irene is really the one you should go to if you want to maximize your investment. I don't think insurance is necessarily a means of doing that. I got this chart, the cons of whole life. It's mediocre investment returns. It's really, really expensive. You're paying fees to the insurance company in that premium, which can be pretty hefty. And I mean, this is why I'm here. It's very complicated, difficult to understand. But the pros of it, I mean, it does build up cash value that you can borrow against, and it is guaranteed on the cash value. And that is my presentation. I try to keep it under 10 minutes. I left it open for questions, so